Welcome to Mortgage Talk 101 here on Super Talk 1270. Time to look behind the numbers. Buying, selling, refinancing. Mortgage Talk 101 addresses real issues in real estate. Now, live from the Super Talk 1270 studios, here's Mortgage Talk 101 host Joe Sheehan.
Body built for radio, saddling up the stainless steel microphone of the Mortgage Network. Always partly sunny here in Mortgageville.
It's windy, though.
It is
Dave
windy.
Floor here also. Windy. It's windy.
Yeah.
But it's sunny. But it's windy.
And Dave's actually, this is how dedicated our co-host, Mr. Housing, is to getting the numbers behind the numbers out to the public. Mm-hmm. He's here on vacation.
I got my dirty jeans on and my Jimi Hendrix shirt. I'm set. I'm ready to go.
Yeah, thanks for showering.
Yep, I showered. I did shower.
We appreciate that.
Yep.
We appreciate that.
You bet. Anything for you.
We don't want to come up with the body odor for radio.
No.
That's certainly something we don't want to.
No. It's a small room here.
It is. The studio. The studio would definitely. We would not want to subject.
No.
We'd have to bring in Arrow. We'd have to bring in Arrow afterwards.
Air cleaning. Yeah.
Interest rates. What's going on with mortgage interest rates as we head into the end of the week here?
Having a tough day.
They are having a tough day. They're down about 30 basis points before I left. But in terms of the week-over-week average, not much movement. Slightly higher over last week. The Freddie Mac weekly mortgage or primary mortgage survey, 30-year fixed rate at 4.13 with 0.6 in discount points. Last week, same rate, same discount points. And the 15-year fixed rate mortgage, 3.26, 0.6 points. Last week, 3.23 with 0.5 points. So no change in the 30-year fixed rate mortgage on the average for the week. A slightly higher 15-year rate mortgage. Still great rates. Today having a rough day, mainly because stock prices open higher.
Good earnings reports from the stock market, I guess. Apple and all those guys did really well. So
absolutely, yep. and even more importantly, the Labor Department reporting that weekly initial jobless claims fell by 19,000 in the latest week to an 8-year low of 284,000, below the 308. And of course, the stock markets love it when good news exceeds expectation.
No.
And as we explain on the show periodically, normally when stocks do well, you can expect a corollary effect, or you can expect rates to do badly. Mm-hmm. Bonds normally don't do well when stocks do well, and so you can normally see a negative impact to rates, and you're seeing that a little bit today.
It's a tiny impact. Yeah, even with a bad day today, it's going to be. Yeah, so at the end of the day, it'll be a tiny impact.
Yeah, you're still going to have rates in the low 4s.
Yeah.
You're still going to have rates in the low 3s on the 15-year, depending on your credit and the program that you're applying for. So, but one of the things I think the best advice we can give people who are shopping around or thinking about getting into the home market, and we actually have a story about this today, kind of on the side, about taking advantage of low interest rates. Mm-hmm. As inflation continues to cook up, if the market continues to improve, if the jobs market continues to improve, if the earnings of the average worker continue to improve, if consumer spending comes up, all these things are the recipe for a true recovering economy and higher interest rates.
Right.
So, although I think we're safe with low interest rates for a while, this is your chance as a borrower or a buyer to take advantage and still be a part of these historically low rates.
Right around 4%. That's pretty awesome.
Yeah, there is. So the locking advice from Mortgage Market Guide today was locking in the short term. So anything that's it's a good time to take advantage of these, because we could see the positive news in the market give rates a little bit of a trouble.
One thing. We always talk about rates. We're looking at we're on a show weekly. It's a weekly comparison we make here. But I saw in our usual thing we look at by the numbers from Mr. Michael Higley.
Yes,
he talks about what the yield on the 10-year Treasury was in 2011. It's the same as it is today. 4 years later, 3 years later. So really, rates just have not changed.
As we've mentioned, the Oracle, Bill Bodner.
Yeah,
has that aggressive
prediction.
Almost what do you want to call it? What do you call the crazy guy standing on the corner saying the end of the world is coming? It's a
Jim, do you know what that is?
What do they call those?
The prophet of doom,
right?
Prophet of doom.
Prophet
okay.
of doom. Almost that kind of prophet of doom. Yeah, the prophet of doom prediction that interest rates could be under 5% until 2020.
Yeah, Bill's not a prophet.
He's not a prophet of doom
or a nut.
But I'll tell you, when you say that to anybody else in the business that has any kind of gravitas or credibility, they look at you like you stepped out of the closet of insanity and joined the real world. And they are like, who said that? And but you look at it and you say 2011, and now we're 2014, and where was that Treasury in 2010?
Well, yeah.
So 2010 to 2014. I mean, it just what's funny is it's gone up as high as 3 in the last 3 years, and as low as below 2. Right? You're right.
So I mean, there's been basically a 1% spread there, and right now it's kind of falling right in the middle.
Back in the middle again.
Yeah.
So, well, today's show, things we got on tap for you folks before we head into our first break, but we've got what homeowners don't know about the real cost of home ownership. We have, of course, buy the numbers as we always like to, and you know what? Today we have a special birthday.
It's a birthday.
It is a special.
It's not a person's birthday.
Kind of.
But there we go.
Oh yeah! Don't you think Barney right now is so happy?
Barney and what's his name? Chris Dodd.
Do you think they got a cake to share?
I hope so. Somebody should give him a cake. I think he gets to testify before Congress. Barney does.
Or should somebody get him a pie?
Yeah.
Right in the face.
Anyway, it's the 4th birthday of Dodd-Frank.
Yeah. Here's a pie. Right in the kisser.
Yeah.
So yes, it is a happy 4th birthday, Dodd-Frank. And, of course, the article we're going to get to here in a second in the show. Happy 4th birthday, Dodd-Frank. Everyone hates you.
Oh, I love it.
All right, we've got...
we got more stuff on Dodd-Frank. We got big banks exiting FHA loans business.
Chase.
That's not a Chase.
Jamie Dimon.
Yeah, getting out of town.
Becoming the number one enemy of FHA loans.
Oh, you were saying Dodd-Frank. I thought you were saying Dodd-Frank.
No, not Dodd.
No, not Dodd-Frank.
She's a nice lady.
She's
a friend of the show.
Sweet.
Yeah,
she's great.
we
like
She's
Dodd.
a friend of the show.
Just for clarification.
Yeah, it was Dodd-Frank.
D-O-D-D.
Dodd is not 4 years old.
Dash Frank.
She's young, but she's not 4.
Yeah, she's definitely. Yeah, okay. We're not talking about Dot. We're talking about Dodd.
Dodd.
Yeah, so it's just for.
We should go Frank Dodd, I guess.
That's why I do that.
Probably because we don't confuse it with Dodd.
That's why I do it. That's why I do it.
Okay, all right.
I didn't know that's why I did it.
But now you know.
But now I know.
Just intuitively.
The genius behind my mispronouncing the bill every time on the radio show is all about the fact that I do not want to confuse it and cannot confuse it with the lovely
I'm pretty sure everybody's calling you a genius right now for coming up with that.
That's exactly right. Like we all know I'm an Atari and a PlayStation world.
All right. Okay. I think I'm a Commodore 64. What are we listening to, Jim?
Okay. Grand Funk.
We're
going out to the Grand Funk.
They're coming. They're going to be down at Prairie Nights.
All right. So all of that, and after the break, we're going to talk about Frank Dodd. We're going to talk about what's the real cost of home ownership and what most buyers don't understand. We got more by the numbers, and the big banks. Hey, FHA may have fewer people offering it out there in the future. So we'll talk about that after the break, right here on Mortgage Talk 101.
Right now it's 70 degrees.
Get the app called Radio Puck for your iPhone and take us everywhere you go. Bismarck and Mandan's own Super Talk 1270.
Okay, if we're going to come in to hit me with your best shot, we're going to have to talk about Frank Dodd.
Yeah, Pat Benner, she's playing up at Four Bears, right? In about a month or something. Yeah. So we're playing music today of people coming to the area. Okay, in the next month or so.
And it fits so well.
It does. Hit me with your best shot.
Because
Frank Dodd.
Frank Dodd. Everybody hates you. Frank Dodd.
Just clarify again, we do not hate Dodd-Frank.
4 years old.
It's Frank Dodd.
Do you know? Okay, so the beginning of this article.
Why does everyone hate it? Why?
Now, just in case you're a new listener today, or you're just scanning through the radio dial and have just caught us, the Dodd-Frank Act, which was established 4 years, was the financial reform act that was going to keep people safe This was going to prevent banks from doing risky behaviors and taking advantage of consumers, and it officially established the Consumer Financial Protection Bureau. So powerful that not even Congress can ask for a copy of its budget.
Yeah, and just a disclaimer that includes you and I because we're terrible mortgage people.
That's us. We are.
Yeah.
We are criminals until proven not to be criminals.
Right. Yep.
All right.
And Jim, just by you're sitting in the same room with us, you are implicated.
Yes.
An accomplice?
Yes. You have no idea how large our shadow is.
Because you let us on this show.
In fact, once you become a customer, you're now an accomplice.
Yes. Yeah. Yeah. As far as the CFPB is concerned, maybe. Yeah.
All right.
Know.
So the act was celebrated. I want you to tell me.
It was celebrated.
I want you to tell me.
Okay.
Outside of somebody in Congress, who has ever said these words? I don't even know if consumer activists have said these words.
Okay.
The act was celebrated as the savior to our financial system and signed with great fanfare on July 21st, 2010. As President Obama signed the act into law, he was flanked by Senator Christopher Dodd and Representative Barney Frank, the act's co-sponsors and namesakes. Have you ever heard, as the law was going into place, after the law was implemented, as the rules have taken, and we're at like 65% implementation right now?
Yeah. Yep.
Have you heard anybody say this was a savior?
No.
Anyone?
I not even those people that you just named.
Not even the people we just named. Exactly. I think, in fact, they are on the record of having said, we didn't know.
Yeah.
That this would be. So anyway, I just the savior. I was like, okay.
Yeah.
So
you know what I have a question about. I just saw this the other day. The president signs all these bills, and he has all these pens sitting there. He writes like one letter at a time. So he signs these bills, and then he writes one letter at a time so people get the pens, right?
Right.
That's the silliest thing I've ever seen. I think. I don't know. I've just as an aside here, I just think that's silly. He picks a pen up, writes a letter, puts it down, grabs the next one, writes the next letter.
Is that for historical significance? Is there like a
apparently? I don't know. Does somebody get those pens? Does somebody get those pens? I don't know. Yeah,
maybe that's what happens, but
that's a waste. Anyway, okay.
So
what
we
else?
Get into this article about how everybody hates the act and what it's done.
Here's another one. It was initially thought of as a driver of housing recovery and improvement.
Yes,
but mortgage applications are shaping up to fall below 2013's level this year.
And this is the other thing. Where are these people coming from? When have you ever heard driving the housing recovery was the regulation of the Frank Dodd Act? I've heard low interest rates.
Yeah.
I heard the first time home buyer tax credit which we all forgot about back in 2011 or was that 2010?
2009, 2010. Yeah.
2009, 2010.
Yep.
I've interest rates in the 3% on the 30-year fixed rate mortgage. I've heard about that. Falling house prices and a shadow inventory that put houses at almost 50% of their peak values.
Yeah.
I've heard that driving volume. I've heard the refinances driving mortgage volume.
Mm-hmm. Oh, that certainly did.
And I've heard the fact that because rates dropped multiple times, where people refinanced to 4%, then rates dropped to 3%, and they went, well, geez, with rates at 3%, why not sell our 4% house and buy a new one at 3%?
3%, yeah.
At 3%,
yeah.
I've heard of all those things driving how the mortgage applications.
Yep. Yeah.
I have never heard that the regulation behind Frank Dodd drove mortgage applications.
No, the bottomless well of knowledge. Nothing has stuck to the side of that, indicating that was true. You know what else?
You and I listen to. How many economists do you think you listen to in a year?
Oh,
live. Not even the ones
in person?
Not even the ones you read or get videos from or subscribe to.
Probably get 2 or 3.
That you live.
What you go to.
That you live.
Yeah.
Right.
Yeah.
And isn't.
And I've never heard him say regulation is good.
And I bet you hear Duncan at least once a year.
Yeah. Yeah.
And I listen. I get to listen to somewhere between 3 and 5 live.
Mm-hmm.
And I have never heard one of them say, "Ha,
boy,
well, good. Hey, you mortgage originators, You banks, it's a good thing you got old Frank Dodd here.
You know what else? One more thing that drives the housing market and all that stuff. Jobs in North Dakota. So really, it kind of just says, regulation, that doesn't do a whole lot. You have to have it to a point, but going over the top is one of the worst things you can do. And really, they should focus more on creating atmosphere for jobs, because the regulation
is just a headwind.
Yeah,
that's all it does.
Yeah.
It just wrecks the fuel mile.
It
just wrecks your mileage.
Yeah.
I mean,
yeah.
So I don't know. I keep looking at this and I keep thinking, I don't know how to even respond to this idea that Frank Dodd increased applications or helped homeowners out or helped banks out or
there's another
and the way that this worked. Let me explain to folks real quick how this worked.
Okay.
So what this was is it's basically a punishment cycle. In other words, it'd be like your teacher. Yeah. It'd be like your teacher catching someone in class doing something really bad.
Mm-hmm.
Let's say cheating.
Yeah.
So your teacher catches one kid in class cheating.
Yep.
Out of 20.
Yep.
This one kid did a really bad job of cheating. And what do we do with this kid? Well, we run him out of the school, run him out of town.
Well, no.
And make sure he can never go back to school again.
No.
And then we make sure that anybody who we can identify who might be like him in the future can't come to school either. But then we make the other 20 kids who never cheated.
Yeah.
We put them under the microscope and act like they've been cheating the whole time and make them fill out and put them under investigation nonstop all day, every day in school to prove that they're not cheating.
Yeah.
And that's how this rule worked. Most people weren't doing bad things. Most people weren't doing anything that needed to be corrected. But we took the part of the industry that ran it out of town. None of them can get back into the business.
Mm-hmm.
People like them can't even get back into the business. But the people left in the business who never did anything wrong, they got to spend all day long proving they're not like the people that got thrown out of the business in the first place.
And there were some. Now, people complain about that. Nobody from the big banks or anything got or served any prison time, etc. But there are people that are in prison right now of what happened. It's not somebody we know. It's not somebody that works at the CEO of some big bank or anything. But like you just said, there are people that paid the price, and then now everybody else, primarily community banks, in North Dakota here, that weren't part of this problem, and they're paying the price for it.
Absolutely.
Yeah.
So anyway, so just kind of understand how it is. Now you had something.
No, it's something. This is another article about the Frank Dodd mess. This came from the Wall Street Journal. Peter Wallison, who actually works with fellows on our radio show, Ed Pinto. They work at the same place. So kind of from the same philosophy. But really what Mr. Wallison is saying in this article is that the regulations in Dodd-Frank, you mentioned they were 64% implemented so far after we got 4 years.
It may be better than that now.
I don't think that's that far off. But they were written broadly, he said. They were written broadly. And the regulators had to figure out, what did Congress mean by this? They don't know, so they're way behind on this. But stuff that they have written, they're not sure about also. So that's created this uncertainty, not just in the financial sector, but for businesses, et cetera. It's created that uncertainty in lending and everything. People talk about, well, we need to get lenders to lend more. Well, they're not sure what's going on. If they can't understand how they're going to be affected by what they do because of regulation that's not clear, they're not going to lend to the business down the street or the person that wants to buy a home, except within very tight parameters. Mm-hmm. And that's what he's arguing here is that regulation.
That's what we talk about all the time in the banking community. And I mean, live conversations that I have with other bankers and other department heads and is that whenever we're not sure, guess what we do? We don't do.
You back up,
which always means the consumer doesn't get service.
Right. Yeah, and that's what he's saying here is this uncertainty is causing a lot of these problems, and it's kind of like get out of the way.
And if we don't do for a consumer, that leads to more applications or less applications for credit.
It's gonna more or less.
It's gonna lead to less.
Yeah. You could say.
Because people will get an idea that we're not helping.
Right. Yeah. They say, well,
No point in
I
applying.
don't have, maybe I go to a couple places and I get turned down. Well, I'm done. Yeah.
And they're
try
all
again, like that.
And they talk to their friends and go, I went into the bank. It's so hard to get a loan.
Yeah. Initially, it leads to maybe more because people might go around trying at different places, but then eventually those people, if they can't get anywhere, they give up.
I still hear all the time, it's so hard to get a mortgage loan. I still hear all the time that you need 20% down. I still hear all the time that,
Yeah. So, anyway, the article just went on to say that basically it's the same thing. It's from his mind, it's a failure, huge failure after 4 years because nobody knows for sure what's going on with it.
Didn't stop anything bad. The bad people are still doing wire fraud and everything else they want to do. And they just get caught.
Yeah.
All right, well, we're going to come back after the break. We're going to talk about what home buyers don't know about the real cost of home ownership. There might be some things you didn't think about. And we're going to talk about them right here on Mortgage Talk 101 after the break.
Sean Hannity, weekdays at 2, only on Super Talk 1270.
All right. We are back.
Oak Ridge
Mortgage Talk
Boys.
101.
They're going to be in town next week, I guess.
They
with the bell.
are.
Yep. All right. Okay, what's up?
Most prospective buyers don't know the real cost of home ownership. Turning it over to you.
This is interesting.
This is your expertise. Well, you're kind of an expert anyway.
Yeah. This is from Housing Wire. First-time home buyers are overwhelmed by mortgage information. Would you agree with that? Do you think a typical first-time home buyer when they come in to your shop? What do you
mortgage loan officer is overwhelmed by mortgage information.
I believe that too. This 94% of prospective home buyers believes they are making a good investment by purchasing a home. Many have not actually done the math to determine what purchasing a home will cost them. Almost half are unsure how to calculate their down payment and their monthly payment and feel overwhelmed by the volume of information to absorb, especially those that are 30 and under. Again, we're going back to Frank Dodd, a lot of new regulation in the last 4 years that specifically addresses mortgages, and there's more to come. There's more new stuff to come. We've got a new loan estimate coming out next year.
August 2000. So just finally, when everybody in the world is going to know how to read the forms we've got now.
Yep. We're
going to change them.
Change them again next August. Okay. Although 87% of these people are confident they will find an affordable home loan, the poll shows that many have not done the math to determine their costs. More than 3/4 of the potential buyers, have been pre-qualified for a home loan. And the reasons that they feel they've done or they started searching for home after one of the following took place: having achieved sufficient financial stability, the market becoming more affordable, improved credit scores, mortgage rates and lending options becoming more affordable, having saved enough for a down payment, but they're unsure of the cost. And let's see, what did it say? Although 87% know what type of property they can afford, only 52% have actually determined what their projected monthly payment may be. Do you run into that, Joe, when people come in? Do they know that I don't have to have 20% down, and do they have an idea that I'm looking for this price range because I know what my payment will approximately be if I'm.
Yeah, I think I see two kinds of borrowers come in the door to our loan officers at Cornerstone, and one is the borrower that really hasn't thought it through at all. They're going to figure it out there at the appointment.
Yep.
And so you ask them what kind of a payment they can afford, and it's the first time they've been asked the question, even to themselves.
Yeah. Okay.
And they're like, well, what kind of payment should we have? They're really dependent on the idea that we're going to tell them what they can afford. And I think that there's. There are those group, but now I'm not talking about everybody, but I'm talking about the majority. Now there are the group of borrowers that come in and they've been on the mortgage calculators and they've figured stuff out and they've done some research and they come in prepared with what they want.
Yeah.
And a lot of times that changes after they actually talk to somebody who's really doing it every day, because they don't know how to calculate mortgage insurance, they don't know how to calculate some of these other things, and so they learn.
And that's typically not in the calculators, right. Might or may not be, but when you don't know,
depends on if you're going to do an FHA loan.
How much does that cost me?
You're going to do a conventional loan, anyway. Yeah. But they have another kind of borrower, and the other kind of borrower who comes in hoping to living on the myth, I like to call it.
Mm-hmm.
So, typically, now it's changed a little bit here, but for a long time, you had borrowers who came in with the idea that they were going to be able to buy a house for the same cost as their rent.
Mm-hmm.
And so they'd come in and go, well, I'd really like to keep my house payment amount on what my rent is.
Mm-hmm.
And well, what are you renting at? $650 a month.
Yeah.
Okay, well, yeah, that's your single bedroom apartment.
Yep.
Okay. You're now trying to buy a three-bedroom house.
Yeah. Okay.
Probably not going to get that done for you.
No.
But there's just because what they hear, of course, and this is to some degree our fault as an industry. What do we advertise? Why throw your rent payment away?
Mm-hmm.
Take the same money you're spending on a rent and buy a house.
Sure.
And so you get people to draw conclusions because they assume advertising tells the truth, and then they walk in not understanding that the advertising is not lying, but it depends on what you're asking to do.
Right.
And if you're trying to now, if right now you're renting a 4-bedroom house in Mandan, and you go to buy a modest 4-bedroom house, if you could find one,
mm-hmm.
your payment might be lower.
Might be
lower.
Yeah.
For sure, comparable.
Yeah.
But so many times when you're a renter, you're moving up when you buy a house.
Yeah.
You're coming from a 2-bedroom to a house.
You're gonna have a 1-bedroom or a 2-bedroom.
You're tripling your square
single
footage.
or you're a
doubling
couple.
your square footage, and so that's the kind of thing that I see. But then every once in a while, I see people come in with all their numbers ready.
That's what this survey found, was that nearly half, 48%, don't know how much their mortgage payment would be if they choose a more or less expensive property. So, like you said, if you're coming from this down here and you're moving up, you're probably going to be paying more, and that's what half the people don't understand that, apparently. So it's important, if you are out there looking for a home or thinking about buying a home, is really to go in and there's all kinds of information on the internet, obviously, but it's also really wise to go in and talk to a person who does this every day and can tell you, okay, here's your principal and interest payment, but here's the other things you've got to think about: mortgage insurance, your homeowner's insurance, which is going to be more expensive than the renter's insurance you have. So the costs are different. So
I think the most important thing, if I was giving advice to somebody, is you don't have to go out on the internet and come in 100% prepared. To be honest with you, you're going to get so much more new information that it may just be disappointing for you to find out how much you didn't know because you thought you were so well researched by the time you got there. Yeah. I think you can do all that. The more literate you are, for sure, the better off you are. What I'd really recommend doing, if you don't really know what to do at all,
mm-hmm.
2 things. One, if you actually go to ndhfa.org.
Thank you. Yeah.
There's a
home buyer education
course. There's a home buyer education course.
Take it at your leisure. It's
online.
Yep.
Get the certificate.
Yep.
It's a good place to start. Just getting literacy about what is what and who is what. Now, the second thing is that I think you also have a list of lenders on there.
Yes.
And any of those lenders that are doing the affordable housing option are probably people who are committed to taking care of first-time home buyers or people who have questions.
Absolutely, because our program takes a little more work on the lender's part, so they are dedicated to it. All of them are.
Honestly, we don't make as much money with it many times.
You don't make as much money. And the other thing is all those lenders have a presence in the state of North Dakota. They know what the market is. We don't allow anybody to participate with us that does not have a physical office in the state of North Dakota. So, Quicken Loans is not, till they open a branch here,
they can't do North Dakota
storefront.
housing.
They're not going to be doing our program. And we think that's very important.
Absolutely.
Is to talk to somebody who lives in your community and understands the market and knows what it's going to cost you to buy a house.
Right, and the other thing, so besides taking some sort of home buyer education, and there are places that offer live classes. If you're not an online person, you can go to the Village. I believe they have home ownership classes. But the other thing then, besides talking to a loan officer, is coming up with a budget about what is the real amount you have left over for a house payment. Yeah. You don't have to figure out what the house payment's going to be. You don't have to figure out what kind of house you're going to buy.
Yeah, so look at what you spend on everything except your rent, really.
Yep.
Is,
and what if the landlord came in and the landlord was Mr. Scrooge, and he came in and was going to raise your rent to the highest dollar he could, what would that dollar amount be today that you could still pay and still live there?
And before you got to move.
Right.
Yeah.
And then bring that dollar amount into the loan officer, and that's going to give you the loan amount, the down payment that you can go live with. And that's going to identify the price range of houses you can start looking at and seeing if it fits your needs. So
good suggestion.
So figure it out backwards.
Yeah.
Number one, I think the homeowner's education is good. It's very easy to get.
Because that helps you ask questions.
What's it cost?
It's $50.
$50.
Okay.
And I know that sounds like a lot of money. People even say like $500 for an appraisal sounds like a lot of money. I don't want to spend $500. I don't want to spend $50 on home buyer
Something's
education.
Worth. There's value to something that's got value to it.
Yeah,
put it that way.
$50. Let's say you don't understand how private mortgage insurance works, and there would have been another option available to you that you would have taken if you'd understood it better. So let's say you wind up spending $100 more a month than you should have spent.
Mm-hmm.
$100 more a month in 1 year is $1,200 times the next 5 years is ouch.
Yeah.
So now if you $50 may save you that kind of money.
Yeah.
Not to mention if even in down payment. So if you wind up putting more down payment than you had to, imagine how that money in the bank might have helped you if you're someone who's cash poor.
Right. Yeah.
And so what's $50 to keep $3,000 in your checking or your savings account?
Well, you hear people, home inspection. I don't want to pay for it. That's too much for a home inspection. But what can a home inspection do? Number one, it can identify a problem that make you not buy that house. But it also gives you ideas of what am I going to have to plan for to fix. My roof is this old on that house. The furnace is that old. I'm going to have to replace those things down the road.
Yeah, $250 might save you $10,000.
Right.
So when you get into the home buying process, one of the other, maybe the third thing on top of everything else we said, is maybe save $1,000 or $1,500 that you're not in love with, that you feel okay about spending for these services that don't necessarily give you something physically
there you go.
back. Like
there you go.
The appraisal, the inspection, title insurance for yourself, not just the bank.
Yeah.
And homeowners education.
Yeah.
So all right, I like it.
Johnny Lang.
Is he originally from Minneapolis? Is that right?
Fargo.
He
moved to Minneapolis.
He moved to Minneapolis.
Yeah. He's coming August 10th.
North Dakota native.
August 10th at the Bell.
After the break, we're going to come back and talk about why people aren't selling their houses.
Yeah. Whole bunch of them.
Right now it's 70 degrees.
Our own radio station. Not Fargo, not the Twin Cities. Proud to be Bismarck and Mandan's own Super Talk 1270.
Mr. Housing, why aren't homeowners selling? And I want the truth.
Okay. You can't handle the truth.
I think I'm entitled.
No, I can't. I don't know the rest of the line. Sorry. Yeah, that's the only one I know. I said, you can't handle the truth. Okay. And I'm no Jack Nicholson. So anyway, but
it's because they can't get enough. It's because they can't get enough for their house, right?
No.
It's not. It's because they bought the house that they wanted in 2011, so they don't need a new one.
Maybe.
It's because they don't have a job.
That's not it. No.
Okay, what is it?
Okay.
Why aren't they selling, man?
It's because their interest rate's too low.
Oh man!
They don't want to give it up. That sounds like a blues song, doesn't it? My interest rate's too low. I don't want to give it up.
I don't want to give up my low.
I think B.B. King did that one, didn't he, Jim?
I got a low rate.
I got a low rate.
I can't sell my house.
Okay. No. You would think home price appreciation, it's slowed down across the country. Not so much in North Dakota, maybe, but so it'd be a good time for people to look to relocate, upsize, downsize, whatever they'd want to do.
They got equity. Here's a good time to take advantage of that house before it gets out of range.
Okay. New problem that many are facing. If people did sell their house today, for many of it, it would mean surrendering a dynamite mortgage rate below 3%.
I know.
Or below, or 4% even, but it's really close to 3% for a lot of them.
The 30-year fixed. But a lot of people finance into 15-year
in
fixed.
15s, and they were like at 2.5. People got down to 2.5 on the 15, didn't it?
Yeah.
Yeah. So they would have to give up that rate, which means even if they bought a home for the same price or just a little bit more, they'd end up paying more per month.
Or stretching their debt out.
Or longer. Exactly. So CoreLogic looked at this, and they found that 1 in 3 current mortgage holders have a rate below 4%. And they figure there's 3.6 million people that are unwilling to sell because of the higher interest rates today. Yeah, but CoreLogic is only the largest aggregator of real estate information in the country. So they don't know much. So they really don't know much.
Sure.
About this. Okay. All right. Sounds like they might, but okay. If you say not,
we're gonna go.
That's fine.
We're gonna go with them.
Okay. You said okay.
We're gonna go with them.
Today, almost 1 in 3 active mortgages has a rate below 4%. Today, the 30-week, we just said, average 4.13%. What happens here, it's a disincentive for otherwise qualified, motivated borrowers. It contributes to the spiral or rising affordability gaps and hence sluggish sales, since it has a negative impact on housing that's available.
Because you come into the market as a new home buyer.
Yeah.
And the only thing available to you is new construction,
which is more expensive. And not coming open at a record level pace either. So they're going
selling
back
them to protect their margins on the house. They're building less.
Yeah. Yeah. Well, they're back to the Frank Dodd thing again. Overregulation. They don't know how many borrowers they're going to have who are qualified. So they can't really expand too fast. This is all tied together.
This is the wicked web we weave.
Yes, it is. Yeah.
We
so
wove.
It's very interesting, and we've talked about this before, that the people are not going. They don't want to finance out of that rate that they have.
When we were refinancing folks at just massive levels into the 3s, and then 15 years in the mid 2s. We talked about, okay, so what happens now when you have a rate at 2.625 and 5 years from now you have less than 70% of your debt left, and 7 years from now you can see the light. You could actually count the number of payments till you're done. You could put them on it would not take you more than 10 minutes to write them on the calendar.
Yeah, and psychologically that's a big deal.
Yep.
I am mortgage free, debt free. That's a psychological thing, and a lot of people strive for.
Yep. And so when you have people in that position, a lot of times they own the house the new buyer needs.
Right. Yeah.
And even downgrading. If I'm going to have my house free and clear, but really it's not the house I need.
Mm-hmm.
I really need this nice little flat with the ground level, entry level.
Yep.
With my wash and dryer on the
everything on one floor.
Yep. That's what I really need. But man, I'm at 2.75%.
Mm-hmm.
What do I do?
I can handle where I'm living at.
I think I can handle. I can hire somebody to go up and down the stairs to the wash and dryer for me.
Yeah, and
when I don't have a house payment.
I'm going to wait to make that move until I really need to.
Until I have to.
Exactly. Yeah.
Which for most people will be death.
Yeah.
You know.
It won't be. I'm certainly in that boat. Same thing. Refinance below 3. I'm not going to move till I have to.
Well, and
because what you just said, the light's at the end of the tunnel.
Right.
Yeah.
No, I agree. I think that this is really, we talked about, we foreshadowed this, and the only way you're really going to get people to move now is it's going to be really the consumer where they really can't fit their family into the house that they owned, or they have to downgrade, or it's gonna be a close to have to decision.
Yeah.
We're moving.
Yeah.
New job opportunities, but you really have eliminated the luxury buyer.
Yeah.
And I don't mean by luxury buyer by rich people. I mean the buyer who just, gosh, wouldn't it be nice? And wouldn't it be nice? And you and the wife, or you and the husband walk around the house for a few weeks in a row where, somebody's got a good promotion and things are going well and the budget's feeling really good. And it's just, wouldn't it be nice, if we had a house that just had the wine cooler installed, and wouldn't it be nice if we just had this, and you go over to a friend's house who just bought a new house that looks like all that, and you go, God, wouldn't that be nice? And you think, well, why are we waiting for that?
Mm-hmm. Yeah,
why
let's
are
go
we
buy a house.
waiting for that if we can afford it and we're in a good position on our house? But that buyer is effectively being eliminated from the pool because the wouldn't be nice gets run into at the 2.625% interest rate, and I've got less than 8 years to pay off my house.
Yeah. So really what this is coming down to is we need all the baby boomers to finally get old enough that they've either passed away so their house can go on the market, or they had to make that decision to move to someplace either for care or I want everything on one level. And that's going to take a while.
Or you'd have to somehow come back to a culturally acceptable perspective on the first home and the new construction of being like the houses we saw originally built in Lincoln.
Yeah.
Smaller, two-bedroom, basic, no garage, sold for a much lower cost per unit that just gets you into a home and then but is on larger lots that has the ability to be built on to expand, modified, remodeled in the future. Yeah. And I just don't see us doing that.
Yeah.
Because to be quite honest with you, the cost of eventually changing a house like that down the road in the future is far too expensive compared to just buying a house the way that you're going to need it to fit your family's needs and stuff in the present.
So. 60 years ago, people bought homes like that. They didn't think, well, that's what we need.
And your kids were out of the house, quite honestly, by 18.
Yeah, and there weren't the. I don't think there was as many other opportunities for like rental housing. It's pretty nice rental housing. There wasn't that many apartments out there. So hey, well, let's get out of here. Let's buy a house.
You bunked up. You had the bunk beds in. You put 3 or 4 kids into 2 bedrooms. I mean, that's the way it was. But there was a time when your kids didn't live with you and on your insurance and your cell phone bill till they were 25 either.
Yeah. The house that my wife and I own was a basement home. Started out for 4 years. The family that owned it lived in the basement for 4 years till they could afford to build upstairs. Right. They were we bought it from the original owner. And that was so nobody would think about doing that today.
And that was also a time when there wasn't such technological advances in the material and construction methods that a person probably did frame a wall on a barn at one point in their life, and they probably could use the same technique to add onto their house. And now that's just not so.
Yeah.
To create the energy efficiency and everything that is available now, and to use the products and understand how the products work and need to be installed in a new home, you got to have some specific knowledge and skill.
Yeah, exactly. Yeah.
Otherwise, what you'll have is something that almost was right and winds up costing you more money anyway when someone else fixes it down the road.
So, well, anyway, we talked about we had a birthday today.
We had a birthday.
Frank Dodd.
We discovered what the homeownership really costs.
Yeah, and people don't want to move because their interest rates are too low.
Their rate is so great. Their loan officers did such a phenomenal job getting them a low interest rate. Yeah. Now they're stuck in those houses. Yeah. Put the tombstones. You know who's doing really well right now?
Who?
Home tombstone business. Because you're just going to put those gravestones right in the backyard because that's where you're going to go.
We're not moving.
And is say, here's, and it's going to actually now include the date you got that great rate.
Okay.
They're going to engrave that on every one of those headstones.
There we go. That'd be something.
Because that's
we'll
what kept
that
you
up.
there.
Yeah.
Okay. Well, hey,
so
folks.
Next week?
Next week it's just us.
Okay,
but after that, we do have a great interview with the North Dakota Association of Realtors coming on to talk about the transfer tax.
Okay.
Something that's a big issue coming up in the state. We're still tracking down Mark Fogarty, the editor for Source Media. So we've got some interviews coming up for you folks next week, where it's always partly sunny in Mortgageville.
All right.
Mortgage Talk 101.
Have a good week, everybody.